The International Monetary Fund and World Bank annual meetings. What is the economic outlook for the globe? Plus, a one-on-one interview with the Pakistani finance minister. Hello, I'm Anand Naidu, and this is The Heat. Global economic leaders and policymakers have attended the IMF and World Bank annual meetings in Washington, D.C. They heard from the IMF Managing Director, Kristalina Georgieva, who had a mixed message about the economic outlook. We will discuss that later in the program with our panel of experts. But we begin with the Pakistani Finance Minister, Mohammad Aurangzeb. He sat down with me recently to discuss the major economic challenges facing his country. Minister, thanks so much for talking with us. Let's talk about the economic situation in Pakistan right now. Last year, Pakistan came close to a default. It's been facing some challenging times. You had the catastrophic monsoon flooding in 2022, and then there was a general global economic downturn. You took office in March of this year. Since then, inflation has gone down to single digits, and foreign reserves have gone up. What is your reading of the situation right now?
Over the last 12 to 14 months, we've actually made some very significant progress on the macroeconomic stability front. And there are various indices which sort of reflect that progress. At the end of last fiscal year, we had a primary surplus on the fiscal side. We had a current account deficit which was less than $1 billion at the end of June. And this, to put it in perspective, a couple of years back, this number was north of $17 billion. The foreign exchange reserves were up to 2 months of import cover. As you said, inflation trajectory was down. Now, where we sit now in the first quarter of this fiscal year, so till end of September, we have actually consolidated all of these gains. The August and September are the months where we've had current account surpluses, and this is on the back of very strong remittance flows. The IT exports are doing extremely well. Our FX reserves are now actually close to $11 billion, which is about 2.5 months of import cover. And as you rightly point out, inflation is a big story because it peaked at 38%, now it's at 6.9%. The policy rate is down by 450 basis points. But the secondary market yields are actually now floating around 14.5%. So actually on all indices, it's been a very good recovery. And on the back of that, we've seen institutional flows coming back into the country, both on the debt side and equity side. And as we speak, yesterday, Pakistan's stock market hit a record high. And this is all on the back of a successful conclusion of the 9-month SBA. I think the last time we met,
that's right,
during the spring meetings,
yeah.
At that time we had said we would want to go into an extended and larger program with IMF to consolidate this position and bring more permanence into the working into these macro variables. And so those discussions then culminated into a staff level agreement back in July. And the executive board gave its approval for a $7 billion 37-month program on the 25th of September. So this was to do both, bring permanence to the macroeconomic stability, yeah, and then, of course, do the structural reforms.
Yeah, there was a report put out by the IMF in which it said that despite progress, and I'll quote some of the report's findings here, it says Pakistan's vulnerabilities and structural challenges remain formidable. It said a difficult business environment, weak governance, and an outsized role of the state hinders investment while the tax base remains too narrow. What do you make of that assessment?
So these are all the structural reforms which we need to do, right? And IMF is correct in pointing it out. And therefore, the 3 areas that we are focusing, which is the tax to GDP, where we have been languishing at between 9 to 10% and moving it towards 13.5%. Getting our energy equation right, especially the power sector. And the third thing is the SOE reforms on the privatization to reduce the government footprint. Therefore, from my perspective, quite frankly, this is the Pakistan program, which is help, support, assisted, funded by IMF. So what the fund is saying is correct, because we've known the what and why in Pakistan for the longest time. And therefore, what they're pointing out in the structural reforms, which are now actually underway, we are not contemplating, they are underway as we speak. And we've always, these reforms have been elusive, and we've always struggled with the how part of it. But I can tell you with a lot of conviction that this is now underway, and we can talk about anything that you want to.
Right, so you're confident that these concerns that have been expressed in that report can be addressed?
Have to be addressed. Have to be addressed, because I've said it in many forums. As a country, our hand has been forced, right? Because if you just look at tax to GDP, how can we get into a sustainable fiscal position if we stay below 10%? Our neighbor is at 18% tax to GDP. So to just get into Committee of Nations, we have to get into north of 13%. So it's not something which we can now sort of continue to kick the can down the road. Similarly, the whole SOE discussion, because especially some of our loss-making SOEs, a huge drag on the exchequer. And therefore, we either need to close them or we need to send them the private sector way so that they can be more effectively managed as we go forward.
Right, now there is another challenge that Pakistan is facing, and that is the impact of climate change. It's not unique to Pakistan, of course. Many countries around the world are facing this, but Pakistan is one of the most vulnerable countries when it comes to flooding. The IMF has a fund, a facility that helps low and middle income countries. Pakistan is seeking around $1 billion in funding for that. Have you got a response to that request? Where does that stand now?
Yeah, so first of all, talking about Pakistan, obviously as a country we contribute less than 1% of the global emissions. But having said that, as you rightly point out, we are in the top 10 climate vulnerable countries. The 22 flooding in Pakistan was really a rude awakening in terms of the size and scale and the damage it can do, both in terms of displacement and in terms of the physical damage and therefore the financial damage. It's really in that context that we are working with various institutions, including the discussion that we have just initiated with the fund. Because from IMF's perspective, obviously the sequencing had to be there. We first need to prioritize EFF.
Right.
And now that is in place, the way I initiated the discussion when I was here for the spring meetings back in April about our desire to go into an extended facility, we are at that stage where we have just initiated that discussion, and we are very keen to take that forward with the fund.
Right, and you've also approached the Asian Infrastructure and Investment Bank for a credit enhancement for a planned Panda Bond. What can you tell us about that?
As you know, we are very engaged with the credit rating agencies at the moment, and on the back of the macroeconomic stability, we've seen upgrade happening across the rating agencies during the last quarter. Having said that, to access Euro or Reg S 144A, we do need to get back into a single B category, and I do think we are on our way. Having said that, the discussion around the Panda Bond is really twofold. One is that we want to diversify the funding, and China capital market is the second largest and the second deepest capital market in the world, and it's about time that Pakistan as a sovereign goes there. Secondly, we are not looking for a large print, because our external finance position at this point in time is quite comfortable. But what we do want to do is to print an amount so that we can be in that market. It's really in that context that we have seen how Egypt did that.
Yeah.
And last year they did a very successful issue on the back of credit enhancement from AIB and African Development Bank. So from our perspective, we have requested AIB to come in as an anchor in terms of providing credit enhancement. On the back of that, requesting then other institutions to come in so we can get to the requisite credit rating so that we can access the local market.
I want to talk about the relationship with China. It's a close relationship. It's underpinned by CPEC, the China-Pakistan Economic Corridor. In fact, the Pakistan Prime Minister, Shehbaz Sharif, thanked China and other friendly countries for facilitating the deal with the IMF. What can you tell us about the status of CPEC right now and what it's doing for Pakistan?
Yeah. So in that context, we had the huge privilege of hosting Premier Lee because the presidency of SCO was with Pakistan, and Prime Minister Shehbaz Sharif hosted him, not only in the context of SCO, but also bilateral discussions which happened while Premier Lee was there. CPEC, and we are very, very grateful for the investment, which is north of $20 billion, which came in phase one, which was all around the infrastructure, right? Which was either in the power side or road infrastructure, the port infrastructure. In fact, while Premier Lee was in Islamabad, there was an official inauguration of the Gwadar airport as well. So I think a lot of the infrastructure has been created. Now, the next phase is less about G2G. It's really more about B2B and businesses which can be relocated to Pakistan with a view that there can be joint ventures, there can be even single entities. Because right now, I mean, if you see, the Chinese companies are quite active in the ceramic space. There's a very good joint venture which is already underway, which is Service Long March. It's a large conglomerate in Pakistan. Long March comes in China. This is truck tire manufacturing. 80% of that is being exported. Actually, a good chunk of that coming to the US as well. And it's really that model which we want to follow so that we can monetize the infrastructure that was created in CPEC Phase 1.
Pakistan has asked to join BRICS. The BRICS summit just finished in Russia just a few days ago. There are many nations represented there. How important is it for Pakistan to be a part of BRICS?
No, from our perspective, well, first of all, BRICS is a very, very important forum. It's just like the discussion in our thought process is very much like the SCO. Where Pakistan has been there for a while, and all the connectivity it creates with respect to Central Asian states is hugely important. Similarly, joining BRICS then allows us to tap into a whole set of countries which went from developing into the developed world, and being in that forum and being associated with that forum is going to be quite critical.
Minister, thanks so much for your time.
Much appreciated. Thank you.
And now for more, let's hear from our panel. Joining us is John Gong. He is a professor at the University of International Business and Economics in Beijing and a China Forum expert. Also with us from Johannesburg is David Monyae. He is director of the Center for Africa-Asia Studies. And joining the discussion too is Sourabh Gupta. He is Senior Asia-Pacific Policy Specialist at the Institute for China-America Studies. Welcome to all of you to this show. John Gong, let me start with you. Let's begin with the address by the IMF Managing Director, Kristalina Georgieva, to the annual meeting. This is what she had to say at her news conference about the state of the global economy. Let's listen.
The global economy has held up remarkably well. Inflation continues to decline thanks to the concerted efforts of central banks, and also thanks to the ease in supply chain performance. Growth remained in positive territory, and interest rates are going down. For most of the world, soft landing is in sight. But people are not feeling good about their economic prospects.
So generally, John, very positive sentiments there from the IMF managing director, although it's a bit of a mixed bag when she said that people are a little bit concerned about their economic prospects. Now, the IMF's growth prospects for China and India are a little bit lower, but it says the Asia-Pacific region will grow the fastest next year. How do you see it?
Well, I think her speech is reasonably optimistic, but I think we all know where the problem lies. I think the issue is with respect to the geopolitical side of things, as well as the ongoing conflicts. I think, for example, when we talk about Europe with the conflict in Ukraine continuing, I don't see a big prospect of significant development over there, significant growth over there. And the same is true, I would say, covering large areas in the Middle East. Fortunately, in Asia, in Northeast Asia, in Southeast Asia, we are still in peace, and I think this is on top of the fact that the region represents probably the most dynamic economic growth areas around the world right now. So I think we know the root problem, and the implication of these tensions. And as well as the geopolitical maneuvering on the part of United States and European Union results in my view, a huge damage to global trade. And speaking from China's perspective, I think we are a big trading nation. Our trade potentially can result in adverse effect from this development in that direction. So I think from China's perspective, we are very interested in pursuing the days going back to globalization. But unfortunately, this is very much constrained by geopolitical strategies in Washington as well as in Europe.
David Monyae, the IMF is also forecasting that global economic growth for the rest of the year will be just over 3%. But the managing director in her speech also expressed concerns about rising debt that could exceed $106 trillion by the end of the year. Looking at the developing world, I mean, how can the IMF be more effective in helping countries in the developing world?
I think a starting point has to do with the World Bank, IMF institutions themselves. As they celebrate 80 years of existence, I think it's high time that they require major transformation themselves in terms of the structure, representation, as well as progressive policies that are people-centered. As it appears when it comes to the developing world, and more so Africa, there are a number of disadvantages that are structural. I think these bodies are not much of assistance. They tend to look at more the stabilization, how to recover, as was the case on the African continent, Kenya in particular, demanding that governments should increase taxation. I think that in itself, it goes against a policy that should be development focused. And there's more that need to be done when it comes to the African continent. The continent still faces, like other regions, conflicts in Sudan, in Congo. And these problems are huge crises that affect development. However, the continent has a lot of advantages that are not used and utilized properly. A huge population with young in the youth, and therefore I think it's high time that both the IMF and World Bank should move alongside the African Union Agenda 2063 to ensure that it assists the integration and to have policies that are people-centered. I think that will go a long way in boosting African economies.
Sourabh Gupta, as David says, there needs to be reform of the World Bank and the IMF. There has been growing distrust of international institutions, and we've seen protests in some developing countries over, for instance, the lending terms that are imposed by the IMF and the World Bank. But how would you assess the impact of these two institutions on what is now a rapidly changing world?
On the 80th anniversary of the Bretton Woods agreements, the two Bretton Woods institutions must modernize. Must modernize means they must be representative of the world. At this point of time, the North Atlantic countries have a disproportionately large quota share and therefore get to dictate the terms on which the international monetary and financial system operates. Now, there has been an attempt to right this by Treasury Secretary Janet Yellen. She has tried to kind of enhance the balance sheet, the lending capacity of these multilateral development institutions. And generally, parties are on board in this regard. But if the United States and its North Atlantic allies are not willing to give space to emerging markets to also frame the contours of how these institutions operate, that money will not all be forthcoming, first of all, and it will just so be the case that the global financial monetary system, economic system, which is already kind of in a process of fragmentation, will then find its own means. The various blocks will find their own means to try to finance development in particular regions. There'll be a duplication in terms of scale. It will just not be done as efficiently as it could.
Right.
And therefore, it's important to bring all parties on the same table and give them an equal share and an equal stake in global development.
Yeah, John Gong, we are getting towards the end of the year, and there is always speculation on how China's economy will perform on an annual basis. The first 3 quarters, we saw growth of 4.8%. What do you think is the outlook? I mean, will the stimulus measures continue to bolster the Chinese economy?
Well, I think this very massive package of stimulus policies, will definitely take its effect over the rest of the year. Let me say that the government's target is about 5%, and my interpretation is that at this stage we're probably looking for a number that is a little bit short of 5%, but it's quite close to 5%. Given the first 3 quarters of performance, I think we're getting there. As a matter of fact, starting from last month, we are starting to see signs of recovery. My reading of these numbers is that it's starting to improve across the board. I think especially in the real estate property market, the central government is starting to address the local government debt issue. So I think things are starting to turn around in my view, I think for China's economy, the next step would be to make sure that the real estate is going to continue to recover, as well as that hopefully we're starting to see some signs of strength in the consumer market. I think it's extremely important that we need to beef up the share of consumption as a percentage of total GDP. So in other words, I think we're getting there. I'm pretty confident that we probably will get to a overall GDP growth figure for the year somewhere above 4.8%, hopefully around like 4.9%. That should be a pretty decent accomplishment for the whole year.
Yeah, David, Sourabh Gupta was telling us a moment ago about the vast influence that the United States and its North Atlantic allies have in these international financial institutions. But I'm wondering to what extent, we could see a shift, maybe a tilt towards the developing world through organizations like BRICS. We've just had the BRICS summit take place in Russia. That was the expanded BRICS. That BRICS is often seen as evidence of this new multipolar world that's emerging right now. South Africa, of course, is a prominent member of BRICS. Will we see more developing countries now starting to work with BRICS?
Oh, indeed. I think we've seen great interests from many countries in the developing world that wants to be part of BRICS. And a new term which is coming, quite a number of terms that are now used, but the global majority is gaining momentum. And you are also starting to see that it's moving, that even some of the countries in the global north are showing interest. Countries such as Italy, France, in the last year wanted to join BRICS. But on the African continent, I think last year Ethiopia and Egypt joined, which is a major milestone and development. And that there is hope that with the rise of BRICS and a clear understanding of changing nature of global power to ensure that there's transformation, particularly of key institutions, the United Nations, particularly the Security Council, and these agencies, IMF, World Bank, and so many other, that they are reformed, they become people-centered, and trade is done in a fair way.
Right.
And lastly, I think one would also say that Africa depends with its trade with China mainly, and factors that have been raised by my colleague have a huge impact on the continent.
Okay, Sourabh, very quickly, I've got less than 40 seconds, but let's talk about protectionism. Let's talk about tariffs. We've got an election coming up in the United States that's just over a week away. What kind of effect is that going to have, not just on China, but on other countries around the world as well?
Oh, it can have very chaotic effects. I think the IMF gamed this out, and they saw that the output effects could range anywhere between 1 to 1.5% of global output. That's a huge amount. And I don't think it's a wise decision at all. And the most important part out here for the United States, which has been leading on the protectionism front, is that it is self-marginalizing itself in the international economy. And hopefully that will be the factor which will serve as a corrective over time for the US to move away from protectionism and populism and get back to supporting the multilateral trading order.
Okay, and that is where we have to leave it. Thank you to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington, D.C.